When applying for a loan, you have two different ways that you can make repayments on your home loan. Option number one is principal and interest repayments, and the second thing is interest-only repayments. So we're going to explain the difference between the two and the pros and cons about both of them. Principal and interest means you're paying the principal, so you're paying down the loan and you're paying interest. Now that generally gets a lower interest rate. So principal and interest repayments get a lower interest rate, and it means your loan is going down. So if you've got a 30-year loan term or a 25-year, whatever you've got, your loan is going down that whole time based on principal and interest repayment. So the principal was the loan and the interest is what you're paying to the bank. Now, interest only means you're only paying the interest. A lot of banks charge a slightly higher fee for interest only, but it means you're only paying the interest component. So instead of paying $1,500 a fortnight, you might be paying $1,300 a fortnight. In a principal and interest repayment loan, that loan is going down. In an interest-only loan, it's staying steady. What are the pros and cons? So the benefit, obviously, on principal and interest that your loan is naturally going down. It does cost you more per repayment because the loan is going down. Interest only, the benefit is it's slightly less cash flow. So the actual repayment is lower every time, but you're not actually making a dent and making repayments. So who chooses for what? So the most common reason we see is interest only is when a client is buying or building a house, so a construction loan. And generally the reason we see that is because they're renting or paying their current home loan while the construction loan's happening. So while the construction loan's getting paid and going up with each invoice, that stays on interest only until they move in, and then it goes back to a principal and interest loan. The other time we see it is investors. Some investors like having interest only because their goal with their interest only is that their property is going up in value. That's their wealth creation strategy. They don't really mind about the debt going down. And in a lot of cases, what interest only means is they can have multiple properties for their cash flow that are slightly less every time, but it means that they can afford more every week. So that's their goal with that. So if you've got questions about interest only and principal and interest loans, have a chat to me. There is a different approach and strategy for every single lender and pros and cons. So as I said, it depends what your strategy is and what the important goal is. Most banks allow for up to 5 years interest only in a lot of cases, some a little bit longer, but it can affect your affordability, because what it's saying is in a normal assessment for a home loan, they're looking at, okay, what can you afford to pay every month in a 30-year loan term? Now, if we make 5 years interest only, it means that the loan term actually naturally drops to 25 years. So there's 5 years of interest only, 25 years of principal and interest. So it's a quicker repayment for that last 25 years. So sometimes it brings down borrowing power slightly. But if you've got questions about interest only and principal and interest, that's exactly what we'll talk to you about when you're doing your loan. We'll tell you the pros and cons that suit your goal and what's actually happening with the particular property we're talking at a time. And some clients have a combination. They have some properties on principal and interest, particularly their own house, and then they're investing